XYLD just slashed its dividend by 25%. This is certainly newsworthy. So in this video, we're going to break all of that down, especially if you are an XYLD holder. I am a massive holder in XYLD. It is 100% of my retirement portfolio. So I got a massive stake in this. I want to talk about it. So hopefully you stick with me on this one. We will discuss exactly how XYLD is structured, and we'll get into some alternative investments that you could use to actually hedge against XYLD if it is a major part of your portfolio, and some other alternatives to restructure XYLD in a way that gives you a little more access to allowing it to participate in whatever the market does without the cover call coverage in it. If you are Canadian and you have not gotten on to Blossom Social yet, I would strongly recommend it. They're not paying me to say that. That's a platform app that I'm using where you can see everybody's trades, buys, sells, what the community is investing in, what everyone's talking about, latest trends. And there is a link down below that you can use. It's a referral code. If you use that link, you get $5, I get $5. I usually, with any kind of money that's generated that you get through Blossom, I just gift it to other people with, like, say, really informative posts. But definitely check it out. I think it's a worthwhile. Even if you don't want to participate, you'll find a lot of great reads on there. Okay, with that being said, let's get into the Seeking Alpha article by Diesel. XYLD, what the declining dividends mean for investors. So we have the summary here. XYLD recently saw its dividend get reduced. The fund's forward yield drops from 12% to 8%. I'm going to elaborate on this a little bit because that might kind of sound a little misleading. This dividend just all of a sudden is 8%. It's not quite the case, but I'll get into that in a later tab that's going to be up here. Okay, investors shouldn't be worried, but prepared. We also offer one possible fund to boost your income when volatility is dropping. So that's what I talked about kind of right at the top. Just a fund that you can use as a hedge against XYLD, since it's income is highly tied to the volatility, which is really negative sentiment of the market. So I'm not going to read through this whole article, but I will just summarize what Diesel here has written. So as he notes, month over month, the dividend has decreased by 25% and it's decreased 37% since last May. What this chart here shows is the total assets under management have increased 72% over the last year, but its net asset value reflected in share price has dropped 8% in that time frame, just for context. This chart basically just shows the dividend increases, decreases over time. You can see in around, I want to say that's March of last year, it topped out at around 50 cents, and ever since then it's been on a slow decline. I want to say maybe a year ago, I almost got into this fund when the share prices were around $52. Thank goodness I decided to wait. I ended up getting in at, I want to say 43, but certainly better than 52, that's for sure. And then we kind of get into the policy here. Okay, so let's just kind of briefly go over how XYLD pays out the fund structure. As always, with cover calls, you want to try to understand two major factors with cover calls. You want to understand the coverage of the portfolio. So with XYLD, 100% of the portfolio is totally covered, which means that none of the portfolio participates in any market action, especially in a bull market. None of it participates. And it writes, number two, at the money call options, which generate higher premiums than, say, out of the money call options. Okay, when it's a little bit more out of the money, it just means that the portfolio has a little bit more, it could participate a little bit more, and there's a little bit of a spread there. But it simply just means less premium when it's out of the money. Okay, so XYLD has a little secret weapon. Since it can't naturally appreciate, say, in a bull market, it actually reinvests into itself. So as an example, if the fund generates, say, 3% per month, what Global X has done to structure this fund is it'll pay out a max of 1%, and then the other 2% gets reinvested back into the portfolio to support the NAV and actually allows it to grow based on that. So it's a nice little way of being able to give it share appreciation. And if you look at a chart of XYLD, it's one of the older cover call funds out there, and it actually has done fairly well over time based on when you get into it, but it kind of has trended far up, far down, just to support that evidence. Now, if it's below 2%, if the premium that's generated is not above 2%, say it's 1%, you get 1%. Do you get 1% payout? No, you get half. You get half of that. If it's below 2%, you get half of whatever that is of the premium. And then the rest just gets reinvested minus trading expenses. So again, to support the NAV. Now, the reason why it's falling so much like that is because of volatility. When volatility, which is measured by the VIX, which measures 100% call options on the S&P 500 1 month out, which is exactly what XYLD is. So keep in mind, the VIX is an index. XYLD is an ETF. So you can see in 2022, volatility was pretty high. You got those richer premiums above 25, but now it's trading in the 15, 16, 17, 18 range, which means lower premiums. And as the market stabilizes and the sentiment is more positive, especially over the long run, your volatility will probably stay low. And I'm gonna actually, you know what I'll do right now? I'll show you guys just an example over the long run. So in the 2010s, there was basically the biggest bull run in market history. We can see volatility was 13, 15, below 15. And then, you get these little odd spikes, but they don't go very high. Okay, so if you're an income investor in the 2010s and market sentiment was really good, you didn't do so good. So you were probably much better. Like if you were to compare yourself against someone who just held the S&P 500, plain vanilla ETF, they would have outperformed you in a total return perspective. But as you can see in 2022 and around the COVID era, premiums were a lot higher, a lot of more negative sentiment in the air. When there's negative sentiment, you are making more money on a monthly basis. Okay, so as an example, now we kind of jump back over to what I basically just described as the history of the VIX, what it all means. A little other piece of info that jumped out to me, which I thought was really important, is so now the VIX is coming down and option premiums are dropping significantly. There are a few reasons for the VIX coming down. One of the most recent introductions is zero-day options. Now traders are able to buy daily options instead of weekly ones, which takes away demand from monthly options. That's something I didn't know until reading this article, so that's something I think to keep in mind if you're an income investor, that there is now just simply more competition, especially if you're invested in cover call ETFs that trade monthly options like XYLD does. Now, one of the other ways that if you hold XYLD, say like myself, you can actually use, say, SVOL, Simplify Volatility Premium ETF. SVOL, what it does is it actually shorts the VIX. So this would be a good fund to get into as the VIX is rising. The premiums on the VIX would decrease, but as soon as it starts dropping, again, markets start to normalize, premiums would actually start to you would actually start to generate really good premiums. But once it's kind of stable and rises, probably SVOL may not be the best fund to get into, but it might act as a really good counterbalance if you hold XYLD, just like I do for myself. Okay, so that's pretty much it for the article. Let's kind of get into XYLD, a little bit of the distribution history. Now, one thing I wanted to cover was the 8%. The article talked about going forward, it's going to be 8%. That's based on the most recent distribution that was at that 25% cut down to 28 cents from 37. If for the next 12 months that stayed the exact same, then the yield would be around 8%. Now we can see that the trailing yield is about 12.37. Now, more than likely, this yield is probably going to jump around a little bit, or the distributions will jump around a little bit, meaning this yield is not going to stay put. But again, if it stayed at the most recent distribution for 12 more months, then this is what you'd be getting. This is what you can expect. So now that we've been into that, let's get into some other alternatives. We just talked about SFL. Let's talk about XYLG. XYLG, another fund by Global X. This fund writes not 100% of the portfolio, 50%. So 50% gets to do what the market is doing, more specifically the S&P 500, and then the other 50% has at the money and cover call coverage. And you can see that off of the most recent distribution, again, for the next 12 months, if that distribution stayed the same, this would be your yield. But the trailing 12 months is 5.71%. Now, if you don't like that option, you could actually, for liquidity reasons, as XYLG is a smaller fund, assets under management, not too much. I want to say it's $56 million. You could actually split XYLD and get VU, which has a smaller expense ratio, and wherever it is here, net asset value is $820 billion. It's got to be basically one of the biggest ETFs out there at almost $1 trillion. But I wouldn't worry about liquidity with this like I maybe would with XYLG. So this option of splitting XYLD and VU and the option of XYLG are great options for your RSP, or maybe you're an American and you got just a regular old cash account. But if you're a Canadian and you don't want to involve yourself with flipping money between Canadian and US denominated dollars, well, you could use ESPX, which again, I've done a video on if you're curious about looking into it. Most people have probably heard from me, which I call the darling ETF, or it is the darling Canadian cover call ETF, HYLD. It makes up, or it used to make up 100% of my TFSA, but only recently I've decided to diversify that, which was something coming into 2023 I knew I was going to do between XYLD and HYLD, both split between my RSP and TFSA. Recently I sold off, I trimmed a little bit of HYLD to get into other cover call funds. But for our purposes here, if you just don't know and you're just like, I don't know, you know what, I would just rather diversify across just a bunch of different ETFs. Well, maybe HYLD could be for you, where you get exposure to XYLD, RYLD, QYLD, the JP Morgan funds, and just a slew of other ones. So that could be another option where you're just like, I don't know, I want to be into income, but just something simple. You just want something simple for your investment journey with cover call ETFs. So with that being said, if you like what you saw, please, as always, do the cliche thing and smash all the buttons of the like and subscribe variety, and be sure to comment down below. I will always do my best to get back to any of you who participate in that manner. It does mean a lot to me, and it certainly helps out the channel. So with that all being said, I will see you in the next video.